Hello and welcome to Black Box Trading. I'm your host JT, and this is the channel you come to for the biggest moves in crypto, whether it is Bitcoin, Ethereum, or any coins that you type into the chat for us to take a look at. We will make sure that you are participating at the beginning of a bull market and locking in those profits before the bear market. Never miss a move again with Black Box. Welcome in. So in today's video, we're going to do a market update. I want to take a look at Bitcoin. There's a shitty candle. We have a weekly close here that just closed moments ago. You are joining us here at the weekly close. And it's a gravestone doji candle. So we will go over the implications of from a technical point of view of what that could potentially mean, as well as just talk about the overall market. We'll take a look at the equities markets as well as the currency market, specifically the dollar, and go from there. So before we get into that, let's get a word from our sponsors. We don't have sponsors, just our free Bitcoin trading bot, Black Box. Never miss a move again with Black Box. This is a 100% free Bitcoin trading bot. Email and password, and you're good to go. You have access to the bot. You will then need to sign up using a API key. If you don't know how to set up a bot using an API, we are happy to guide you through that process. And if you have any questions, join the free Discord and we will answer any and all questions. That's enough for the advertisements. Aussie Canuck Guy, g'day mate, how's it going? No, not ending. Wrong slide. Let's go back over here. Press the wrong button there. All right, so gravestone doji. Basically, how a gravestone doji looks is you have an open. Let's actually zoom way in here. Let's zoom way in. You have an open and you have a close that are relatively at the same point, and you have a very long tail on top. This is showing that a rally took place and it was smacked right back down, which we saw that this week. You know, the ETF, the SEC approval, or Grayscale's ETF was something to do with the fucking ETF. I knew it was something that I would want to wait and see how the dust settled. The dust settled negatively. This was an up thrust. If you were in the private group, we told you to just chill, don't get too excited, stay to the short side. We are currently short. Black Box, the trading bot, is short. If you were on the bot, you flipped short a few weeks ago, and we're maintaining our position in that short. So going back to the gravestone doji, here is basically what it looks like. So you have your open, your close at the same point. You have a very high tail, or shadow as it's called right here. And it's not a good sign. It shows you that sellers are present. There's a lot of supply in the market, and that the market demand doesn't have what it takes to overcome the supply. New supply keeps coming in, and there's just not enough demand. Where I think we are in the market right now is not so much that we're seeing new supply come into the market. What I'm seeing is a very, very just a lethargic market. We have no demand. There are no new participants. There's no new money coming into the market. There's no news stories. There's no hype. There's no nothing. The only people that are here are the people who are either long-term Bitcoin holders or the people who have been here from the previous cycle. And if they're still around, they're getting chopped up and they're getting kind of tired. I think that there's a possibility that we could see another capitulation. It doesn't necessarily mean that we need to revisit new lows, but we can see a time-based capitulation coming in the coming weeks to months. We will have to see, but I don't think we're going to finish off the year in a positive light. But so that's what we're looking at. Now let's take a look at some further examples of other times that we've seen this gravestone doji take place. So you can see, we had one quite recently up here. We had a gravestone doji that did result in a downside move, pretty significant downside move. If we go back further still, you can see another example of a gravestone doji back here. This was already in a very, very high accelerated move to the downside. So just continuation pattern to the downside on this move right here. We had another gravestone doji back here. It did... there was a rally that happened after it, but the weeks following right after the gravestone doji did result in lower prices. And we had another gravestone doji back here marking the top of the 2019 rally, the 2019 rally marking the top of the 2019. So this one was a lot choppier, but it did result in, a significant downturn. And this is kind of where I think we're at. This is where I think we're at. I think we have kind of done, this move. We came in the bottom. We had our bear market rally. And then typically speaking, you come down for a secondary test of some kind. Now, this is going to be more from the Wyckoff point of view. You have that secondary test to just confirm that the low is in. It doesn't have to come down this far. It doesn't have to come back down to the areas of the breakout or the low, but you do need to confirm that a macro higher low is in. And as it stands right now, we have not tested the market with a macro higher low. So I think we're looking at something along those lines now, and that lines up with what we've seen in previous cycles. So, in previous cycles, you get multiple tests of the low. Let's actually back this up here. You can see capitulation, retest, capitulation, retest. And now where are we today? We have capitulation. And we're looking for some sort of retest. The retest could be, here. It could honestly be where we are right now. I think we do need to get a little bit more of a market flush to really prove to the savvy and smart investors that the low is in. But, it can happen at any point. Point I'm trying to make here is we have not made that secondary test in the macro price cycle. Now, I want to draw your attention to these lines that I've drawn on this chart here. We have the orange. Let's make it a little bit brighter. And we have the blue. Now, the blue represents the 2019 rally off the low. Okay, so I just matched the candle from basically the capitulation candle off the low until we broke past the all-time high. That's the blue line. Then I took the line of the capitulation candle off the low of the 2015 cycle into the 2017 break of the all-time high. And when we take those two kind of roadmaps of price action into consideration, we can see that we're really not deviating from what's typical in the price action. If this is your first bear market, you're going to feel as though crypto's dead. You're going to feel as though everybody's gone, that it's never coming back. It's being regulated into oblivion, that, no new money's going to come in. Anybody who is intelligent has moved on, and no smart people are coming into this market. And I can tell you that that's very normal. Human behavior is quite predictable over a large data set. And if you're looking at the charts every single day, you're looking at it on a day-to-day basis, trying to make heads or tails of direction on the small and volatile moves of the bear market, you're going to drive yourself A, crazy, and B, you're going to lose sight of the bigger picture here. You're in a bear market. Price moves slow. It moves a lot. It moves up. It moves down. It feels like it's doing well, and then it feels like it crashes. But over time, it's moving up. It's volatility. That's why you're here. You're here for the volatility. That's literally why you got into crypto in the first place, was because of the volatility. Okay? Don't lose sight of the bigger picture here. I think it's very safe for me to sit here and say the price of Bitcoin is going to be at a higher price a year from now. I think that that's a very fair and easy to make statement. when we get into the bull market, it's going to be extremely easy. Throw a fucking dart at the board with a bunch of cryptos on it and invest in that wherever the dart lands, and it'll be a winner. It's like shooting fish in a barrel when you're in these big macro bull markets. Like when you break past an all-time high, it doesn't matter what you pick, it fucking goes up. It doesn't matter. You know, I've been here many, many times, and it doesn't matter what you pick. So do be patient. Don't take on too much leverage. The biggest danger, in my opinion, in this type of environment is people. Here's what happens. Okay. This is very, very typical. And let me know if this is you. You know, people get used to the easy money. They get used to the easy money of this environment. Okay. We'll paint this green because it's easy money. And these are new participants. They don't know jack shit about leverage. They are not trading futures. They are not trading options. They are not doing any of the fancy stuff. They go to their friend and they say, hey, what do I buy? And the friend says, buy this. And then they buy it. And then the price goes up. So they're spot market buyers. That's better for the spot liquidity in the order book. So it makes price move more efficiently. And in a bull market, it's moving up. So it's very easy to move the price up. But secondly, it's very unsophisticated, and you get these unsophisticated people coming in, and then they bring their friends, and then they bring two friends, and they bring two friends, and you get this frothy, over exuberant bull market. When the reality of the bear market kicks in, it's usually around this point that you start to really freak out. You know, you're in this area right here. And what people start to do is they start to learn, and they start to go and experiment with different things. They learn about leverage. They learn about different ways to kind of, increase their portfolio size by taking a 1% move and turning it into a 10% move and trying to compound that. And they try to become traders. You can be a trader in a bear market, but it is the most difficult trading conditions possible. You are not going to find yourself on a whole lot of success. And also the trading style is very, very different in a bear market. You need to get in, you need to get out, you need to be extremely aggressive. So what happens to a lot of people in this environment is they chop their account to shreds. They absolutely chop their account to shreds in this environment as they're experimenting with leverage. They're learning TA. They're playing with this, playing with that, and they suck at everything that they do. I would caution against this, and I would tell you to go back to your roots. The type of investment behavior that you had back here, buying in the spot markets, is much, much more applicable down here than it is over here. So just a word of caution, if you find yourself piling on leverage and taking a little bit too much risk and you're losing what little you have left from the downturn of the bear market, reevaluate. Stick to the spot markets. Have a higher time preference. Look to the longer period. Think about, okay, if I buy this now, is it going to be at a higher price in a year? Don't get greedy. These are the things. This is the way that you have to think in this particular environment. I'm not stressed. At all. And I've never been more sure of anything in my life. I mean, Bitcoin is only getting stronger. You now have huge institutional players that are picking up as much Bitcoin as they fucking can. They've got a big long-term roadmap as to the path forwards with what they're going to be using Bitcoin for. The institutions are coming in. They're already in. BlackRock is a major player. They own majority shares of many, many mining companies, on top of the fact that they own a shit ton of the underlying asset. I feel like I haven't breathed in like 2 minutes here, but I want to make it very clear. Don't fucking give up your Bitcoin right now. Don't give up your Bitcoin. You should be accumulating. Keep it simple. Look at this chart. Look at this logarithmic band. We have the green band and we have the red band. When you're in the green band, you're buying. When you're in the red band, you're selling. Keep it simple. If you want to do a little bit of trading, take a small percentage of your portfolio and allocate that to learning how to trade. And then while you're learning to trade with black box as well. If you can't outperform black box, don't. Just let black box be that little bit of leverage that outperforms the market. As you can see, we outperform Bitcoin by about 2,000%. Do not go all in on black box, okay? I do not recommend that. I recommend that you hodl in cold storage, learn how to do self-custody. There is exposure with exchanges of any kind. So, it's not the be-all end-all solution, but it's a fantastic metric for you to measure your success. If you can't outperform black box, don't try. Just, use it as a way to buffer your portfolio. All right, now let's get into some other assets. That's Bitcoin. I think we've beaten that to death. Feel free to spam some tickers, guys. If you want me to take a look at some assets, I'll take a look at stocks, currencies, whatever you wish. But we'll continue the show here looking at Ethereum. Ethereum is still doing what we were talking about last time. We were talking about this ascending triangle, right? This is a bullish formation, okay? Now, let me just make it clear what we're talking about here. We're talking about this ascending triangle. This is a bullish formation. Yes, it is a bullish formation. That means it breaks bullish 75% of the time, okay? Not 100% of the time. There is no such thing as 100% in any market, but it typically breaks bullish. Now, if we're looking at where the price action stands right now, it's at a decent point. The reason that we are not choosing to participate at this nice dip buy here is our indicator's bearish. We have, we use a momentum-based indicator, which, credit where credit is due. It's not the best in a sideways trading environment. It's much better in a trending environment, but we stick to the strategy, and the strategy is saying that we are bearish. So the indicator is red, the bot is short. The bot doesn't trade Ethereum yet, but if it was trading Ethereum, it would be short. And we're not really interested in becoming a participant at this point because we're more focused on Bitcoin. Bitcoin is the market leader. When Bitcoin does well, everything does well. So take that into consideration as well. It's an uphill battle trying to fight with altcoins when Bitcoin doesn't have cooperation. The easiest way for you to determine, this uphill battle is using Bitcoin dominance. Bitcoin dominance has been on an uptrend for, over a year. No, just about a year. A year today has been up only. When this chart is in an uptrend, it means it's not altcoin season. It's really that simple. When this chart is in an uptrend, it is not altcoin season. That's why your altcoin trades, or more so your altcoin investments for the long term, have not been performing. And if they are performing, they're not outpacing Bitcoin. So take that into consideration as well. You do need to see a downtrend in Bitcoin dominance. If everyone's betting on having to start a bull market, shouldn't we be cautious on any one-sided trades? I don't feel like the narrative is necessarily that the halving is going to spark the bull market. For me, this is just human psychology, and human psychology is about, giving people this incredible opportunity, and then that incredible opportunity is taken away from them, and then they lose all their money. Then they're in the depths of the bear market, and it's like this time-based despair where they have to just, come to the emotional terms of what they've done. And sorry, I've got a dog here. And that takes time. It takes years. It takes years for that emotional turmoil to, be processed. And some people never come back. They really do. They come in, they get into the market, and they never come back. And they're just, exit liquidity. They've come here to provide liquidity for the whales to take profits. And yeah, so basically, I'm losing my train of thought here. Yeah, I lost my train of thought. But anyways, the narrative of the halving, it's just price cycles. And the halving is an important thing from a supply point of view. It's also an important thing from a narrative point of view, but I don't think it's an important thing from a fundamentals point of view. What's more important are the fundamentals of what is smart money doing? What is smart money doing? Smart money is acquiring the asset in large quantities, in very large quantities. Smart money's buying, do what smart money's doing. Simple as that. When dumb money comes in and they're buying the fucking top, you sell, because dumb money is dumb money. And you need to do the opposite of what dumb money's doing. What is dumb money doing today? They're saying that crypto's dead. They're saying that nothing is ever coming back. They're saying this, that, and the other. That's what dumb money's doing today. So do the opposite of dumb money. All right, let's take a look at the stock market. Another interesting narrative too. Now this thesis of mine might actually piss a lot of people off, but there's a huge narrative right now that the expectation is we will get another altcoin cycle. If there is something to be more cautious of, it's the narrative that we are guaranteed an altcoin cycle. I have no doubts whatsoever we're going to have a Bitcoin cycle. Zero doubts. We're doing what smart money's doing. Smart money's buying Bitcoin. But everybody and their dog seems to think that we're going to have an altcoin cycle. And the fundamentals of altcoins are a lot shakier, especially with some of the advancements in regulation and advancements of the fundamentals of Bitcoin that kind of pull into question some of the fundamentals of altcoins. I don't know if you guys are familiar with drive chains, and I'm not going to get into drive chains here on the channel right now because it's a very intense topic and it's not appropriate for a stream right now, but write it down. Drive chains. Go research drive chains, because this is going to allow for an altcoin market that's built on top of the Bitcoin network. Not to say that we're not going to see, altcoins come back a little bit, but it is possible that we don't see all-time high breaks of many altcoins, because the fundamentals of the altcoins were usually speed, throughput, performance, yada, yada, yada. And the trade-off was always security. With drive chains, you have speed, performance, blah, 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 and security, because you're taking the security of Bitcoin. So go take a look at drive chains. All right, ETH BTC. So no changes with ETH BTC. We're still in this downtrend that we've been in since August of 2022. Until this downtrend breaks, the price of Ethereum is matched to or doing worse than the price of Bitcoin. So if the US dollar price of Bitcoin is rising, you might see the Ethereum price in US dollars rise, but it's not rising fast enough to outperform Bitcoin. This is a downtrend. So the trade right now is still Bitcoin. Ethereum is not outperforming Bitcoin. It is doing worse than Bitcoin. So be aware of that. We need to break this trend line. Until we can get something like this, it's not the time for Ethereum. All right, let's take a look at the S&P. S&P is just trucking along, man. It's doing what the S&P does. The S&P does these big, long stair steps up, super tight ranges, stair steps up, and then it crashes into volatility. Breaks the trend line, and then stair steps up. It's doing exactly what it's supposed to be doing. So uptrend continuation is likely for the S&P. Same story on the NASDAQ, just a little bit more of a volatile chart, but it does this very typical price action. The NASDAQ is a little bit more interesting because it does have this parabolic formation happening. So there is a potential that we get a blow off top in the NASDAQ, and that would be a very frothy market condition for all risk on assets. But as it stands right now, we're not going to jump to that conclusion, and we're just going to assume that it just ticks to the upside as it's been, chugging along with the S&P. Let's take a look at the dollar. I was calling bear on the dollar here when we broke below here, but we actually did get a rally back over my triangle here. So we broke down below. I was like, there it is. There's the breakdown. We're heading down to lower levels in the dollar. And then boom, we're right back up. So we're still range bound. So I'm going to call this triangle invalidated at this point, and we're going to turn it into a parallel channel. And we're just going to observe this channel. Something like that, I think. Maybe we'll square it off. Something like that. But we're still range bound. We're still digesting. We're still, consolidating inside of the market until we can get a clean break above, or a clean break that sticks for multiple weeks below. It's just going to continue to trade sideways here. Let's take a look at gold. Gold's a really shitty chart. Honestly, you got to go to the monthly to make any sense of it. And it's not great. It's really not great, especially when you turn on the RSI here. You can see huge bearish divergence here at this top. Let's go to an even higher chart. Let's go to the 3-month chart. This is the quarterly chart. Look at this bearish divergence. Massive bearish divergence here. Lower high. Higher high. Huge bearish divergence here on gold. Really struggling to get above that that psychological $2,000 level. It keeps getting rejected. Got rejected once, twice, 3 times. We're unable to get above right now until I see gold clean above 2,000. I'm going to be very apprehensive that we get a rejection here. The rejection would probably bring us down to potentially somewhere around the $1,600 to $1,500 level, with the extreme bearish case for gold being back down to probably the $1,200 level for gold. So that's the more bearish case. But as it stands right now, it's still digesting up in this level. It's just there's a lot of things that we can point to that would indicate that there is definitely weakness at this point as far as gold is concerned. Bullish divs on the DXY. So you do need to be careful with certain. You notice how I don't do divs on the S&P. I don't do divs on the NASDAQ. I did a div on gold because it's gold USD. I don't typically like to do divergences on indexes at all. And the reason is there's too many variables. There's too many variables to consider. Like the DXY is made of several different currencies. So when you have an index, I'm much more interested in trend direction, much more interested in trend. I don't care so much about, overbought, oversold, this MACD cross, momentum this, momentum that. I don't really care about any of that stuff. I wouldn't even use alphanumerics on the DXY. I care a lot about sideways, up, or down. What is the trend direction? And the trend direction of the dollar right now is sideways. So we just assume sideways. I keep it really simple with indexes because there's a lot of variables that go into indexes. Doge BTC. That's an interesting one. Let's take a look at that. Doge BTC. Okay, Doge BTC. I don't know. It's made a fresh low. Is this a fresh low? It's a fresh low. It's made a fresh low. So it came up, it had a pretty nice rally in BTC terms, and then it's just ground away. It's just been grinding to the downside. This very typical slow grind into the ground. It does seem to be bottoming, but it bottomed here, right? Then it got a pop, and now it's ground below where it bottomed out before, and it's at a new low. So it's still in a technical downtrend. It's in a technical downtrend with really, really low volume as well. Doge is kind of a measure of degeneracy in the markets. Dumb money's not here. Dumb money's given up. Dumb money left. Dumb money is saying that, crypto's never coming back. And if you want to know what dumb money's doing, follow Doge, because Doge is a beautiful representation of dumb money. Dumb money's not here. That's what Doge is showing us. Dumb money's gone. Maybe Elon Musk tweeted a thing back here in fucking October of 2022. But since then, it's just dumb money's gone. Let's take a look at BNB, see how BNB is doing. Hate this coin. I hate what's been going on with Binance. There's a lot of fundamental FUD going around with Binance. And to be perfectly honest with you, I don't know / care about the fundamentals. The only thing that I know that I find extremely disturbing is my perceived price manipulation. This is a 73, we'll call it 74% down, 74% downside move. I don't know why I can't think today of BNB tokens. And when we do that to Bitcoin, Bitcoin experienced a 78% downside move. Now, you're talking about the highest market cap coin in the market. Ethereum. Let's take a look at what Ethereum did. What did Ethereum do? The second largest cryptocurrency in the market experienced an 82% move to the downside. The number one cryptocurrency experienced a 77% move to the downside. And then miraculously, for seemingly no reason, BNB did 73. I'm sorry, but this is manipulation. This is CZ propping up the price. They're doing something. They're selling Bitcoin, they're selling Ethereum, and they're propping up BNB. You can't play this game forever. You can't manipulate markets forever. Eventually, this will resolve, and BNB is going to do what it is supposed to do, which is do a 95% correction. We'll call it 90. Let's go easy on them. We'll call it 90. It's going to do a 90% correction, which brings it to $50. You know, $50. That's what I think is going to go on with Binance, and that could kill him. That could kill Binance. I really don't want this to sound like FUD, and I know it does sound like FUD. I'm an analyst. I look at the technicals. The technicals don't make sense. It makes no sense that BNB has done less of a retracement than Bitcoin. It makes no sense that BNB has done less of a retracement than Ethereum, unless we're in the context that Binance has a shit ton of BTC and they have a shit ton of Ethereum, and they are selling Bitcoin and they are selling Ethereum, pushing their prices down more and propping BNB up. Don't like it. And if we break this $183 line in the sand right here, then there's honestly nothing holding it up. Look at this structure on the way up. Nothing. Absolutely nothing holding it up. This whole area is just dead fucking space. Dead space. If we start cracking into this, it's just going to fall. It's just going to fall to its next support, and its next support is $48. We will see. We will see. All right, let's take a look at what's going on with Bitcoin Cash. I think Bitcoin Cash is going to be a big player in this cycle because of what we've seen. We got a sneak peek at what happens when ordinals get very, very hot and frothy. When the ordinals market pops off, fees go through the roof, okay? Through the fucking roof. Everybody and their dog is going to be saying that Bitcoin is dead, Bitcoin can't scale, Bitcoin this, Bitcoin that. And then what are they going to do? They're going to look at solutions. And what is the most widely adopted scaling solution? The fork of Bitcoin, where their claim to fame was bigger blocks and better scaling. So do watch out for Bitcoin Cash. I didn't talk about Bitcoin Cash at all last cycle because I didn't think it had a place inside of a narrative. But this time, I think, is different. I think that Bitcoin Cash, Bitcoin's SV, there might even be a new fork of Bitcoin that happens during the bull run that will solve the scaling solution, the scaling problems of Bitcoin. But Bitcoin scaling is going to be a narrative. Mark my words, it's going to be a narrative. So do keep a lookout for these types of Bitcoin alternatives. Bitcoin Cash being the most popular one. Not taking a position in this one. You know, we kind of got a pop. You can call this a sign of strength. We'll see how it pans out. I anticipate that this will probably range at a higher level for likely at least the rest of the year before potentially beginning to start its uptrend. But as it stands right now, we have mostly sideways with a little bit of a sign of life coming in. But until it can take out the high at 325, then it's going to just continue back down to where it came from back in the $100 range. All right, let's take a look at Litecoin. This trade we're finally out of, got stopped out, break even, is what it is. Big waste of time, big waste of funding. Paid a lot of funding to hold this position, and it didn't do anything for us. So we're out of this trade, and it's just heading right back down to the lows here. So we're looking at this to come back down to about $50 before it kind of calms down and flattens out again. So you'll get a double bottom formation for Litecoin. Litecoin will also be part of that scaling narrative. So it's not to discount Litecoin. I think that, you know, in the context of Bitcoin struggling to scale, Litecoin can be a good narrative. So, you know, we'll look for double bottom buy. We'll probably get this kind of double bottom formation for Litecoin as the bear market continues. Solana, I don't know. It's stuck under resistance. Haven't looked at Solana in a while, and this little blue box that I drew is still very applicable. As long as we're below this blue line of resistance, this blue box of resistance, lower levels are assumed, with probably a double bottom getting us back down to the $7.80 range. Let's take a look at XRP. XRP, not terrible. Man, the XRP crowd is loud and vocal. They are great cheerleaders for this asset. If you want to call it an asset, I think that it is. Never mind what I think. But yeah, it's still making higher lows throughout the consolidation. Nice SOS move. So we'll see if this is able to hold the current level. If it's able to hold the current level, then there's a chance we could actually get a breakout and a trend reversal on XRP. If it's unable to do that, then it's likely to follow the same sort of pattern that we're anticipating with Litecoin, where you go for that double bottom formation. So we either hold this 50-cent range, which is a great psychological range, or we'll see you back down at below kind of the 30 to 25-cent range for XRP. All right. Any other requests? If not, I think we will just close it out there. What did I hit? Oh, yeah, Cardano. We may as well just talk about Cardano. Incredibly low volume, incredibly low demand. Nobody even talks about Cardano anymore. It's at 25 cents. I don't know. I don't think smart contracts are necessarily going to be the narrative this cycle. I think that we're going to have other things, because Bitcoin's going to have smart contracts. And with Bitcoin having smart contracts, it's going to be very hard to compete with these other solutions. So is it going to be a strong enough narrative? Is there going to be enough demand? Is there going to be enough use case for Cardano? We'll have to see. It'll probably rally, but if I was to take a bearish guess as to where it'll rally, it'll probably do 50% of its prior high. So let's pull a fib on that one. Assuming this is the bottom, we'd be looking at $1.69, $1.70 for the price of Cardano as a high, with the extended target going to $2. XRP, I agree with your assessment. Do you know anything fundamentally about HBAR? I know enough about HBAR. It's proof of stake. I don't believe in the fundamentals of any proof of stake coin. I don't think that proof of stake is something that has staying power in the long term. But, you know, the long term, what does that even mean, right? Are we talking long term 20, 30 years? In which case we can have several bull markets with proof of stake coins. I don't know about the fundamentals of HBAR because it's proof of stake. That's pretty much a big check mark for me. Oh, you're proof of stake? Don't give a fuck. But let's take a look at HBAR anyways. if you guys are interested into why I take such a hard stance on proof of stake, if you guys aren't following Checkmatey on Twitter, come into the Discord. And if I don't post it right away, somebody remind me about the proof of stake argument. Come into the free Discord, and I'll share a video with you that really, really lays out the arguments as to why proof of stake is a fundamentally flawed design, and why proof of work mining is a very fair and equitable system for what we're building, which is a sustainable, asset for the entire world, where you don't have centralization of power. Money controls, and in a proof of stake system, the largest stakers get an increased share. So money just gravitates to the stakers. But he goes into much greater detail, and it's a fabulous video to watch. It's a must watch, really. And he's a must follow on Twitter. Absolutely, without a doubt. He's fantastic with on-chain analytics. He works for Glassnode, and he's got some very, very compelling arguments and theories about many of the crypto assets. H-bar probably comes back down for a double bottom, like many other ones. So we're identifying the trading range as basically this. So it's at the upper end of the range. It's resting on the midpoint. It'll probably come down and consolidate right around. Oh, this is market cap. Let's go. Let's try that again on a price chart. So it's actually below the mean, getting rejection from the mean. So this thing obviously inflates at a very high rate. And it's at 4 cents now. It'll probably come back down to, I think a penny will probably hold. Oh, 3 pennies. So 3 cents. We're not far from its, lows. But again, until Bitcoin dominance begins to change the trend to the downside, you're fighting an uphill battle with any altcoin that you pick, period. Any altcoin that you pick, it's an uphill battle while that is in an uptrend. Otto, thank you so much. There it is, at Checkmatey on Twitter. Fantastic. Thank you very much, Otto. He's a really good follow. Glad to see you back on YouTube. Thank you, Brett. I plan to be doing this on a more consistent basis every time I plan, but it's hard keeping up with a market that has very, very low demand. The fire's coming back. I'm ready to kind of help you guys, see the forest for the trees. There's a lot of shitty content out there, so I'm going to do my best to not only provide these weekly live streams, but start pumping out some content so that you guys can be bull market ready, security fundamentals, new coin calls, stuff like that. So that's coming. I'm here in the live. What's going on? Whimsy Crypto Pro Trades. No problem. Thank you for the streams. All right, guys, I think I'm going to shut it down there. Thank you all for joining in to the streams. If you guys aren't already signed up for Black Box, give it a look. Come into the Discord, ask stupid questions. We're happy to help you guys. I think that this is going to be a very powerful move. It's going to be a very powerful tool, not only just for your trading. This is an example of what our bot thinks the moves are going to be. Never miss a move again. So even if you don't trade, 100% with the bot, it's going to give you guidance on your whole portfolio and where the bot, it's just another opinion, and it's an emotionless opinion. Emotion is a money killer in this market. So if you can have a bot where it's just like, all right, well, what does the bot think? Are we bullish? Are we bearish? Are we long? Are we short? Do I want to listen? All those things can be taken into consideration. It's free to use, free to start up. If you don't have a Bitgate account or you don't have an OKX account, it's 100% free. So name, email, and a password. It's all you need. Thank you all for joining in. What Discord should we be using? For all the Black Box stuff, go to the Black Box Discord. If you are in the crypto jungle, there should be links for the Black Box Discord. If not, just hit me up and I'll get you a link over to the Black Box one. You can also just go to blackbox.pro, BLKBöX.pro, hit join community, and it'll get you in there. And yeah, that's all the time I have for today. Please trade safe. It is a jungle out there. Peace.